Okay, you're welcome to this channel. My name is Akinwale Akindia. I will be speaking today on CISA Domain 1 Part 2. It's quite a pleasure to meet you once again on this channel to talk about Certified Information System Auditor. Certification, one of the most glamorous, one of the most relevant certification globally in the field of information security and the IT audit. In the previous video, we looked at part 1 where we started the introduction of this domain. So if you have not watched the part 1, try and check my channel for the part 1 of the CISA Domain 1 series. Okay, so let's go. Effect of laws and regulations on IS audit planning. Now, a very good IS auditor is a person that understands relevant IT laws and regulations. There is no organization that operates in isolation. All right, so you always have a legal environment. Okay, remember the PESTEL, okay, analysis, political environment, economic, social, technological, all right, environment and legal environment. So the legal environment is very important, even in my IS audit practice. So the auditor needs to gather the documentations on all the laws, regulatory requirements that pertains or that are relevant to the organization being audited. Then you as an auditor also, you are supposed to also be aware of the laws and regulations that are relevant to your work as an IS auditor. All right, so it is very important when you are performing an IS audit to document those laws. Okay, and of course, this varies from countries to countries, varies from sector to sector, okay, from industry to industry. So we have to collate the relevant laws and regulations first. Then secondly, you need to check the internal policies in that organization. So you want to see the IS security policy, for example, whether it is in line with the applicable standards, regulations. For example, the organization has implemented ISO 27001. Of course, ISO 27001 has its own requirements on policies, information security policy. So you want to check what the standard says on information security policy, compare with what the contents of the information security policy of that organization reveals. So you want to see whether there is a synergy or not. All right, if there are other relevant laws, also, for example, in Nigeria, we have the MIDA, all right, for the banking industry, we have the CBN, Central Bank of Nigeria, all right, for the telecommunications industry, we have NCC. So you need to be able to check the internet documentation, internal policy standards, procedures in the organization to see whether they actually reflect the requirements of those external laws and regulations. All right. Then, if the content is okay, what about the implementation? They can have the right policies, but the implementation is weak. So you also need to check what the implementation, all right, the extent of the implementation of those policies and standards in the organization. And you also need to realize that sometimes some organizations are very weak in documentation, but they have practice, okay? When we get to capability maturity model, I will talk about that. So because the maturity is still relatively low, maybe level 2 repeatable, right, or even level 0 adopt, they have practice, right, but the documentation is not too solid as it's supposed to be. So if you look at the ISACA question and answer database, you will see that there are questions they set on that, right? If you look at the database questions, you will see questions testing your knowledge when you get to the field and the auditee or the client does not have appropriate documentation. Do you stop the audit there? The answer is no. All right, you have to check what the practice they have in the organization and see whether the practice, the stated practice, is being followed. Of course, you are still going to write recommendations at the end of the day that appropriate documentation should be done. All right, despite the fact that they have a practice in place. Okay, business process applications and controls. This is definitely one of the most important topics in Domain 1. ISACA expects you as an IS auditor to be familiar with processes, business processes. There'll be a lot of questions that will test whether you understand the importance of business processes, the knowledge. So if you don't understand the business process, how are you going to audit it? How are you going to audit the applications, the technology, all right, driving those processes? So before the technology, we look at the process, okay? So there are some business processes that this CISA expects us to be familiar with. For example, e-commerce, electronic commerce. All right, as an IS auditor, you should be able to know what are the areas of concerns around e-commerce, electronic commerce. E-commerce is buying and selling over the internet. Of course, you have the popular CIA coming into place here. CIA, confidentiality, integrity, and availability. Okay, so confidentiality now. How do you ensure confidentiality on an e-commerce platform? So the auditor will be looking for things like encryption. Okay, you'll be looking for things like whether they have encryption, for example, the use of the SSL certificate. All right, so you'll be worried if they are doing transactions with ATM card, debit card, credit card, and there's no SSL. All right, so you'll be looking at the level of encryption on the website. Okay, so confidentiality concern. We also be looking at integrity. All right, can information be altered without authorization? That is also a concern. Okay, so you are going to be checking things like authentication here. So how do I verify that the user is real, or the user is actually authentic? So the user must have a way of identifying himself to the system, and the system verifies or validates the identity. So we are looking at things like one-time password. For example, many websites have that now. OTP. So the auditor will be very happy to see something like this here. All right. OTP, strong passwords. All right. Strong passwords are required on the site. Okay. The auditor will be looking for things like activity logs. Okay, so we can trace if there are changes that are not authorized. Okay, the auditor wants to be able to have information about that. Okay, you will be also be looking at things like digital certificates. Okay, or PKI, public infrastructure. I'll be talking more about that in Domain 3. Okay, public infrastructure, things like certificate authorities, right? I want to see certificate authorities. I want to see digital certificates, all right? I want to see digital certificates here, okay? Okay, I want to see digital signatures. All right, I want to see digital signatures also for authentication, non-repudiation, all right, and integrity. So I want to be able to see all this and more to be able to ensure integrity on e-commerce websites. And of course, the A is the availability. Okay, the A is availability. So I want to see disaster recovery procedures, right? Disaster recovery procedures. Very important. Okay, so business continuity plan, BCP. Okay, so I want to see capacity planning, uh, resources management, capacity planning. All right. I want to see exercise and testing. Okay, I want to see exercise and testing. Great, great, great. See, so these are the concerns of the IT auditor or IAS auditor, right, on electronic commerce. Okay, even the website itself, I want to confirm the software testing was done. All right, software testing, detailed software testing was done on the application. All right, I want to confirm that we have input validation on the website, input validation. All right, everything that is typed on the site, the system check and cross-check before processing. So you want to avoid attacks like SQL injection. Right, that is very popular on websites, right? SQL injection. So if I have input validation in place, all right, I'm most likely I will be able to prevent SQL injection and all other attacks that that exploits lack of secure coding on the website. So these are issues that auditors expect to check and check when you are auditing an e-commerce application or e-commerce business processes. Okay, we'll still talk more about all these definitely as we continue. All right. We also have electronic data interchange. Electronic data interchange. Now that's very interesting. Okay, so you have this technology that's EDI. Okay, it's also its acronym EDI that can be used for paperless technology. Okay, so EDI is paperless technology, and the idea is that we want to be able to transfer documents, okay, easily, invoices, all right, receipts, right, receipts, good delivery notes, right, good delivery notes, okay, good received notes, and so on. Okay, so we can electronically transmit this between organizations. Is that not wonderful? Okay, so this is the idea. This is the idea of EDI. And so you are going to have company A, all right, transmitting, okay, to company B, okay, via EDI. So you have the EDI device in A site, you have EDI device in B site, and of course there must be a connection, right? So something must connect them. So it's either you use a wired connection or you use a wireless connection, okay, to connect these two sites together. And of course, when you have connections, all right, you'll be concerned with things like connectivity, uptime. So the auditor will be concerned with the uptime, okay, of the transmission link, whatever medium, all right, that has been used. Okay, so the uptime will be of concern to the auditor. All right, authentication will be of concern. How do I verify that the person sending me the message is actually the person? All right, so the auditor will be looking for access controls here. Right, the auditor will be looking for access controls. Okay, how do you confirm integrity? All right, integrity of the transaction. For example, completeness. All right, completeness of the of the transaction. Okay, so we'll be looking for controls like what is called functional acknowledgement. Functional acknowledgement. Right, I send you A transmit to B, transmit an acknowledgement. I got it, all right, to A, so that A can have peace of mind that yes, the message has been delivered. Or you have controls like, sometimes when you transmit fax, pages, you are going to have the numbering. There are 10 pages, so you have page 1 of 10, page 2 of 10, page 3 of 10, 4 of 10, right, 5 of 10. It looks simple, but it's a very good control. All right. So if I get 9 out of 10, 9 pages, I know that one page is still missing. It's a control. All right. So functional acknowledgements. So talking about integrity of transmission generally, I'll be looking at things like control totals. Okay. I'll be looking at control totals. Right, we're looking at things like segment counts. Okay, segment counts. Right, so I should be able to count items, number of items. I should be able to have total debits process, total debit sent, total credit sent, total debit received, total credit received. We know all that. Okay, I will be concerned also about confidentiality. Okay. Some of the things we are sending across may be sensitive, so I will be concerned about encryption, right? While at rest and while in transmission, okay? So these are the issues, all right, that the auditor is going to be concerned about with EDI, electronic data interchange. Okay, is that not wonderful? Email, wow, email processes in organizations are very, very important. I'm very sure you have checked your mail today, and if you have not, I'm sure you will do, definitely do very soon. Email has become seriously part of our daily life. What are the issues? Okay, of course, one of the primary issues here we are all familiar with is spamming, right? So you get mails unsolicited, and so the auditor want to check, do you have controls, all right, to address the challenge of spamming. All right, there is something they call a Bayesian filtering. Bayesian filtering. It uses the laws of statistics to determine whether an email, a message is likely to be a spam or not. So based on the statistics and threshold, you can throw a particular mail to your spam folder. All right, so you want to see technologies like that to address spamming. And of course, we are all worried about phishing. Okay, it's a big problem. It's a big problem in many organizations. We're all worried about that. So you get a mail from your bank, right? So to say, asking you to click a link so that your account will not be deleted. And so you click the link, and then they're asking for further information, your credit card, primary account number, your primary information number, identification number, PIN, CV to the email. You submit it, and wow, the account balance is done. Phishing. All right, so as the auditor expect to see controls like security awareness training, okay, in place to address that. Security awareness training is done regularly. Of course, you expect you are going to have filtering technologies, all right, filtering technologies to also address phishing, but most importantly, security awareness training is very important. Then, of course, you can have a denial of service. Okay, your email server can be attacked. Okay, so you expect the auditor will be checking for things like network security, all right, network security, load balancing, okay, monitoring tools, okay, monitoring tools. So I want to see things like SIM, security information event management tools, right, in the organization to manage denial of service. Okay, there are other challenges also. For example, you can have email spoofing. Okay, you can have email spoofing. Somebody can clone an email and it's looking like the email of your CEO and it's instructing you to wire money somewhere. It has happened, it's happening, and people act on those emails. No, it's not from their boss. Okay, so we have email spoofing. All right, so we can have things like digital signatures. Yeah, so the auditor wants to see controls like digital signatures activated on the email application. Okay. There's also one area I've seen in the ISACAP the question and answer database. The issue of archiving of emails, all right, archiving of emails, all right, is very important. So I have an email client. Okay, my email app is telling me that my email is already getting capacity is getting to the threshold. I have to delete some mails, and of course, some of those mails that users will delete, maybe in 5 years' time, may become, of legal interest, so of contractual interest. So what do? The users have deleted the emails. You don't want that to happen. You don't want to be cornered. So you expect that you're going to have, data retention policy or email retention policy. So some of those mails, even if they are deleted on the user's client, they are archived. Okay, they are archived on the email server. All right, so that is very important. Archiving of email, very very much of importance to the CISA candidates. Okay, point of sale. This is big business now in my country, Nigeria, where we now have, emergence of serious digital transformation in the banking industry. Okay, so we have agency banking and you have point of sales everywhere. All right, helping to bank the unbanked. Okay, in Nigeria, and it's not just for the banking sector, supermarkets, just name it, virtually everywhere. Okay, so one one area I've seen as concern here is the issue of reconciliation. All right, reconciliation is a big deal. A lot of transactions take place on POS, especially, you have ATM from bank A, all right? The merchant is using bank B, and so the POS is from another bank entirely. We are talking about, transactions, just one transaction going through like maybe like 6 phases. It's very complex, and of course, once in a while things will get, things might not work, right? Customer is debited, the merchant does not get the credit, so it could be very messy sometimes, and if this is not taken care of course, it can lead to fraud. So reconciliation controls are very important that the auditor will be checking here. All right, the auditor will also be checking for anti-skimming technology on the POS machines. We've seen cases whereby the POS machines are skimmed, such that anybody that uses his or her card on the ATM machines, man, the person is now a victim, targeting the debit alert on your phone because your ATM details have been skimmed, just been captured. All right. So the auditor will be checking for anti-skimming controls on the point of sale machine. Okay, I think those are the key control issues on point of sale. All right, electronic banking, man, this is big business. This is big business. All right, so you have banking at your home, banking, right, at on the go, banking anywhere. So you only go to the banking, when maybe there is serious need, and because of that, there are a lot of issues. Number one, of course, the auditor will be concerned about availability. So now that banking is 24/7, what technologies, all right, have the bank put in place to ensure that the app will always work? The app will always be on. It's a serious concern. All right. So the auditor will be checking for business continuity. All right. Business continuity planning, the SASA recovery planning. So the technology they put in place. All right. Then of course, obviously, anti-fraud technology, anti-fraud techs. The auditor will definitely be concerned about this. Right? Electronic banking is the inherent risk is small as regard fraud. Okay, people will always keep on trying to break, to hack the electronic banking system. Just go to Google, check online. There are millions of fraud cases all over there in the internet. So the auditor need to be checking for anti-fraud technologies. All right. The auditor authentication, of course. How do I prove that this transaction is originating from the right source? Okay, so the auditor will be checking for the access controls, all right, that are put in place. What about non-repudiation? We'll be talking about this a lot in domain 5. Non-repudiation, electronic banking. How do you ensure that people that originate a transaction do not deny that they are not the one that originated the transactions? So you need to be able to have proper audit trail, all right? What we call credit to grave, all right? Credit to grave track of everything that happened. So we can show you your face, all right? You say you are not the one that went that initiated the transaction, but this is you. Can you see? You logged in at so time, all right, at so place. So that non-repudiation control need to be fair. And of course, just like in POS, man, you need to be doing reconciliation. Very, very important. Reconciliation cannot be overemphasized. So a lot of transactions are taking place per minute on banking platforms. So the auditor need to ensure that proper reconciliation is being done, okay, regularly by the banks. Okay. So that's that on electronic banking. What about automated teller machine? And this is a very big word. Okay. So it's also very important. The auditor will be checking for anti-skimming, all right, tech also, anti-skimming technology. So we've had cases of ATMs being compromised, so that when people use their cards on those ATMs, the cards are compromised and the customers start losing money through fraudulent transactions. So you want to check for anti-skimming technology, right? You want to check the structure of the ATM. Can it prevent people from being able to go from behind? Okay, there is a form of attack whereby people can just stand by at your back, and it happens a lot, at many ATMs. So people are keying up. Then you have somebody standing behind the guy that is using the ATM, and is free to actually see what the guy is typing. So there are some ATMs the way they are structured. Okay, there is a cover behind the guy that is using the ATM, so you cannot see what the person is typing. All right. There is also some of them that your hand is under an enclosure. Okay, the idea is that people cannot see what what you are typing. Okay, the pin. Okay, you are typing at your ATM. So that that attack is called shoulder surfing. Shoulder surfing. So somebody just standing at your back. So do they have controls for that on the ATM? Okay, and of course, the same way reconciliation is very important here, right? I've seen a lot of challenges here for many organizations. Okay, reconciliations are very important for automated teller machines. So the auditor will also be checking for controls like that. Okay, then purchase accounting system is a big deal. All right, basically any of your, let's call it your core business application, regardless of any organization where you are. Okay, so the auditor will definitely first, review the process, review the process that we are using the accounting system for. Okay, review the process, understand that business process, the process flow very, very well. Okay, check the integrity of processing. Okay, check the integrity of processing, and that shouldn't be difficult. We can use test data, right? We can use test data. Post some data that you already know what the output should be or will be. Then you compare that output with what the system has generated. Then you'll be able to know whether the system is processing right or not. And of course, you want to check access controls definitely on the purchase accounting system, authentication. You want to check rights management on that system, right? Do you have maker, checker, right? Read rights, write rights. Okay, we want to check for activity logs. We want to check for activity logs on the purchase accounting system. All right, you want to check maybe for also handshake integration tests. Are there dependencies with their purchase accounting system? Are there other systems that feed into the accounting system, or the accounting system is feeding into? You want to check the integrity of the handshake. Okay, and so on and so forth. So these are those, we cannot go through all business process. So ISACA just decide to just select this one. Of course, artificial intelligence and expert system is a big one now. Globally, you have technologies like neural networks, which have learning ability, we can be used for fraud detection. Okay, can be used for fraud detection. Okay, so you have AI, artificial intelligence. Okay, weak artificial intelligence, strong artificial intelligence, expert systems. All right, so the auditor needs to understand the process. Okay, what are we actually using these systems for? Computing is garbage in, garbage out. It's garbage in, garbage out. So what artificial intelligence expert system is what you feed. Of course, some of them have a learning ability, but a lot of time, right, the take-off depends on the kind of data you fed into the system while it is learning. Okay, so if those data are wrong, then definitely there's going to be a problem with the output of the expert system and artificial intelligence. So the auditor should understand the processes that the AI and the expert systems are being used for. Then also on the study, the learning process, the kind of data that were used in maturing the artificial intelligence and the expert systems. Study that learning process in detail. All right. On expert system, there's something that is called knowledge base. Please take note for the exam. Knowledge base. So this is where the knowledge of the expert is resident. And so if this knowledge base, is compromised, then the output of the expert system is going to be compromised. So the auditor should check for the integrity of the knowledge base in an expert system. So, like I said, we can't go through all processes, all technologies you see in an organization. So this is just part of what ISACA does want us to know. All right, review question. which of the following will best allow the sender of a message or an EDI application to know that the message has been received? A, functional acknowledgement. B, batch control to task. C, heavy checks. D, telecommunication redundancies. You know, I mentioned it the other time. So A send message to B. How will A know that B has gotten the message? B sends back a functional acknowledgement. So the best answer is definitely A. Okay, so that is very straightforward. Now, let's talk about internal controls. I love controls. All right, what are internal controls? Internal controls are simply procedures, policies, activities, rules, okay, guidelines put in place by an organization to ensure what is allowable in the organization is communicated and enforced. Okay, so internal controls are basically to help the organization achieve its objectives, block unwanted practices, all right, encourage desired practices. Honestly, in layman's language, that is the definition of internal control. That is the description of internal controls. Internal controls help us, all right, to reinforce, basically reinforce best practices, okay, then discourage unwanted practices or behavior. That is what internal control do in an organization. Reinforce best practices, discourage unwanted practices. And you should take note of this. Internal controls, they are outputs. Internal controls, I love this. Internal controls are outputs. Great. Are outputs of the risk assessment process. I hope you agree with me with this. So you cannot be talking of controls when you have not done risk assessments, all right? Internal controls are outputs of the risk assessment process. So we have looked at an organization, we are vulnerable to confidentiality breach. So what do? Encryption, right? Symmetric, asymmetric, encryption, hash function, cryptography, access controls. So because we have done risk assessment, we know what we are likely to be exposed to. Okay, so that is about internal controls. Now, what are control objectives? Control objectives are the desired outcomes. Okay, so desired outcomes. Okay, it could be right. Control objectives are the same. Please take note whether we are talking of the manual controls or technical controls. Okay, I remember some years ago looking at the CISA database question database. There was a question like that, right? Do you think that control objective will differ in a manual environment compared to that of a technological driven automated environment? The answer is no, right? So controls can be technical, can be administrative, can be managerial, but the desired outcomes, right, basically remain the same. Okay. Very importantly, what are the types of control? Now, this is important. So we have preventive controls. We have preventive controls. So preventive control basically block certain unwanted events from happening from the word go. It doesn't allow them to happen. For example, you have access controls. You have access controls. Okay, you don't have the ID, you don't have the password, you can't gain access. Okay, you don't have the biometric feature, you can't, you know, you don't have your biometric feature is not registered in the biometric table, you can't have access control. All right. So you have security guards. Okay, you have bouncers. Okay, at the gates of the building. Okay, so these are preventive controls can actually stop the events from happening. All right, training. Okay, training is preventive control. Background check. I hope you agree with me. All right, all these are preventive control. They can actually block the event from the start, from actually happening. So you have also detective controls. Okay, you have detective controls. These are controls that can warn us, right? So they alert us that our preventive controls are failed. So there is a problem. Okay, security guys, you need to act. So for example, you have IDS, intrusion detection software. Okay, you have IDS, intrusion detection system. Which other one? Internal audits is largely detective. Okay, though it's becoming more proactive. Okay, but generally internal audits is largely detective. Any other one? Logs, yes. Audit logs. Audit logs are detective controls. They can help us alert us that there is a problem. Okay. What about alarm systems generally? Alarm systems, fire alarms, smoke alarms, okay, burglary alarm, detective. Then we have corrective controls. So what are corrective controls? Corrective controls are controls that help us to minimize damage. So we are already, our preventive control have failed. Luckily, our detective controls have alerted us. How do we minimize the damage? So we can have backups, right? We lost our production data, but luckily we have the backup tapes off-site. So we can quickly go to the backup, the off-site and restore the backup tapes. Okay, contingency plan. Okay, contingency plans. We have an office in Victoria Island in Lagos. Then because of an incident, we could not have access to the building. But luckily for us, we have another site, an alternate site in Yaba, Lagos. So we moved our team, okay, to Yaba, Lagos, or we switch to the cloud. Wow, corrective controls. So those are corrective controls. They minimize the damage for us. Okay, then we have compensating controls, overlapping controls. Now, the question is, what are compensating controls? Compensating, all right? So compensating controls are, so they are layers of strong and weak controls, such that the strong controls compensate for the weak ones, right? So you use a mixture of strong and weak controls. So if these weak controls fail, the strong controls, right, can actually save the day for us. For example, you have a register, you have an attendance register, okay, for everybody to sign in, okay, physically. Now that's a very weak control, because as humans, there are people may choose not to, not to sign in, okay, but for maybe apart from that general register, for a restricted, part of the building, we now put the biometric dot. Okay, so even though people have signed or may not have signed the register, okay, that biometric door is a strong control. Okay, so you use, or again within the building we can have CCTV. So you have a physical register, you have CCTV of premises, you have a biometric door. All right. So there are mixtures of control, strong and weak. So if the weak fails, we can rely on the strong to save us. All right. So that is compensating controls. Then we have overlapping controls. So overlapping controls are layers of strong controls, only strong controls. So that means you spend more resources on overlapping controls. So that means there must be a business justification for you to use overlapping controls. All right. A good example is two-factor authentication, or maybe even triple-factor authentication. So to have an access to a restricted, a very important application, critical application, right? So you request, you have to use some password, user ID, and strong password. Okay, biometric feature, and one-time password. Just for one application. Those are overlapping controls, multiple strong controls. Okay, so that is what we mean by overlapping control. Okay, review question. Which of the following is a control that can be used to detect fraud? Right. A, segregation of duties. B, background check. C, audit log. D, backup. All right. Of course, segregation of duties is preventive control. Background check is preventive. All right. Backup is corrective. So the only detective control we have there is audit log. Great. Okay. So C is the answer. Yes. Let's move on to audit risk and materiality. Now, this is one of the most important topics in CISA and in audits generally. Audits can fail. Remember in part one, I said an audit can only give us reasonable assurance. There is no audit that can give us absolute assurance. Okay, so you don't check everything. We'll talk about sampling in part 3 of this series. Okay, so sampling creates what we call sampling risk. And since you don't audit everything, what you didn't check might come to the audit later. Okay, so audit risk basically is a risk that the auditor's opinion will be wrong. I can give case studies, but so many case studies on this, right? So you have auditors, okay, working on the audit for 3 weeks, 4 weeks, checking everything that they could check. Whereas the most important files, somehow omitted them, right? I think recently I was watching a video about a guy that's destroyed one of the biggest banks in Britain. Okay, a bank that had been existing for about 200 years. Okay, and at the time, the guy was heading their branch in Singapore. And at the time, the bank was suspecting that something was wrong. They sent auditors, okay, to go and audit that branch. But the auditors finished their job and they did not uncover the fraud that this guy was committing. And the guy was, in that video I was watching on YouTube, the guy was saying that they didn't check what he was actually expecting them to check. So the fraud went undetected for a longer period of time before it took a clerk to uncover that fraud. That's audit risk. All right, it could mean the auditors were negligent, and it could mean that they were not, just that since they didn't do 100% testing, something can still go wrong. Now, there are three components that can lead to audit failure. Number one is the inherent risk. Inherent risk is a risk that comes naturally with the process, comes naturally with the system, comes naturally with a business. You start a bank today, expect fraud. You start an insurance company today, expect false claim. All right. You start a construction company today, expect accidents. Just like that, it's inherent. So the risk that you have to encounter before you start talking of what are the controls, compensating controls that can apply. So it's when you understand the inherent risk of an industry, you can start planning on the compensating controls. So when an auditor does not understand the inherent risk of the auditee, then the auditor is in trouble. So you are auditing a process you don't understand. So that means you will not understand the inherent risk in that process. You are auditing a business, an industry, a sector you know nothing about. So that's why we talk about it in domain one. So you don't take an audit you are not qualified to audit. Inherent risk. But note that primarily inherent risk is not, the responsibility of the IS auditor. Actually, it is the management. It's the management, the executive directors, the non-executive directors, the CEO. We are supposed to understand the inherent risk of the business you are leading. The second risk is the control risk. The control risk is the risk that the controls put in place by management will fail or might fail. So you have security guards that went to sleep when burglars came and stole the company properties, right? Or the CCTV did not record for one reason or the other during the period that an incident occurred. Okay, the activity log did not capture because of a bug on the same tool. Control risk. The risk that controls put in place might fail. Control risks are also for the management of the organization to also manage, not the IS auditor. The last one is the detection risk, and that is the only one that the IS auditor can actually directly control. The inherent risk, the detection risk. The detection risk is the risk that actually tests the preparedness of the IS auditor, that tests the experience of the IS auditor, that tests the skill, the competence of the IS auditor. So it's the risk that the auditor somehow will miss what is not supposed to be missed. And it could be due to several factors. Number one, first-time audits. First-year audits is always very challenging because you are not familiar with the terrain. So some issues, you might miss some key issues you are not supposed to miss. Detection risk. All right? Or the auditee did not cooperate. There are certain information you need, certain resources you need that you were blocked from having access to. This will also lead to detection risk. Sampling will also lead to detection risk. All right? You did 80% sampling. The 20% you did not sample might be where the problem is actually residing. So what do? You have done 80%. You have done your best. So that's just sometimes experience of the industry. So sometimes you just see as if like magic. It's not magic. Some auditors will just go straight to where the problem is because they understand the technology, because they understand the sector. So when inherent risk combines the control risk combined with detection risk, what you have is disaster. What you have is the audit risk. The auditor has completed their audit reports. The weeks after, months after, all right, we start hearing stories of issues that were actually there and the auditor did not detect it. All right. So that is audit risk. Let me talk briefly about materiality. So what's materiality? Materiality basically is about the threshold for substantive testing, right? Materiality focuses more on thresholds. Okay, let me write that here. So it guides the auditor on thresholds for substantive testing. You can't test everything in an audit. You can't test everything, right? So Pareto rules still apply here. Pareto rule, okay, 80-20, 80-20 rule. So you need to be able to major and minor. So materiality depends on size and nature of the transaction. I remember I talked about materiality in part 1. Okay, so you can check the video of CISA Domain 1 part 1. So size of the transaction will guide you whether it's something you need to test in detail. And of course, size varies. Microfinance bank compare with maybe a national bank. The national bank maybe compare with a central bank. What will be material in each of those organizations will be different. Okay, the manufacturing industry, oil and gas, materiality will be different. Even within oil and gas, all right, based on the size of the organization, we're going to see varying materiality. So the auditor needs to be very careful, all right, in deciding the materiality threshold. So there are some transactions that might not be very big in terms of size, but the nature may be questionable. So the auditor needs to be watching out for nature of transactions. So even though the transactions are not up to the materiality threshold, if the nature is questionable, professional skepticism. So you need to still ask questions. Okay. Review question: which of the following is the greatest risk to the effectiveness of application system controls? A, removal of manual processing steps. B, inadequate procedure manuals. C, collusion between employees. D, unresolved regulatory compliance issues. Now, all of them are very serious concerns. All right, but the most important one here is C, collusion. All right, collusion nearly has no antidotes. Okay, so you have the maker and checker who are supposed to be checking themselves, have agreed together to commit fraud. Okay, so you have a whole box in agreement to rip off the organization they are supervising. A whole ESCO agreeing to rip off the organization. The whole department, man, is going to be difficult. So collusion is a very serious risk in organizations. Okay, if you have thoughts on that, you can also comment in the comment section. I would like to hear what you think about collusion in organizations. Okay, the risk that should first be understood by auditors is A, control risk, B, inherent risk, C, detection risk, D, financial statement risk. Which one should you first? The answer is inherent risk. That's the first risk you should understand. That is the risk that comes with the organization you are auditing. All right, the technology is complex. Okay, the business is fraud prone. There's a lot of cash on premises, inherent. So it takes understanding of the environment. So you need to first understand the inherent to have a good understanding of what can go wrong in that business environment. Okay, let's look at type of audit and assessments. So we have IS audit, which is basically auditing of technology and the subsystems around the technology. That's how we call it the IS audit, not IT audit. So we audit technology, we audit the people, we audit the policies, we audit the procedures, we audit the organizational structures. All right. we audit the management systems. So it's not just technology, right? So we want to be able to check whether the system put in place by management is able to prevent irregularity, is able to ensure effectiveness of operations, is able to ensure efficiency of operations, is able to ensure protection of information assets. Okay, that is IS audits. We have compliance audits, very popular. I've talked about compliance recently. So you want to check whether they are complying with the regulatory requirements, whether they are complying with contractual requirements, whether the business is complying with legal requirements, regulatory requirements, and so on. Right? If they have subscribed to international standards like ISO 27001, you can perform a compliance audit to determine the level of compliance. Great. Financial audits, which are called the mother of all audits. Okay, I think from my own research, I think this is the first type of audit we ever had. So audit of financial statements, audit of the statement of financial position, otherwise called balance sheet, income statement, and so on, to be able to determine the truth and fairness of the financial statements. Okay, operational audits are basically audit of internal controls, audit of application controls, right, to determine the adequacy of controls within the within the organization. Okay, you have integrated audits, very popular these days. So you conduct application, IS audits, financial audits, environmental audits, all manner of audits combined together. So the big five, big four, this is what they do these days. So you audit financial statements, and you also audit the technology that produce those financials. We have admin audits, all right, to audit efficiency of operations, audit effectiveness of operations. So this can lead to business process re-engineering. Great. Specialized audits. So you have some audit that are specialized, like third-party service audits, right? You want to audit, for example, your vendor. Okay, so audit of outsourced financial business processes to third-party service provider. So you may want to get assurance about how the vendor, the vendor you have outsourced to, right, is actually meeting certain laws, regulations, and standards. So you have a vendor audit. We have a computer forensic audit, which is basically used to detect irregularity, detect and investigate irregularity. So here, very importantly, you have what is called a chain of custody. Chain of custody. So once the investigators have detected a fraud on a machine or on a disk, they have to preserve that evidence in such a way that the jury will be convinced that the evidence has not been tampered with from the day of the time of discovery of the evidence to the day the evidence is being presented to the jury in court. This is what is called the chain of custody. All right. Review question. During the security audit of IT processes, an IS auditor finds that documented security procedures do not exist. The IS auditor should A, create the procedures document based on the practices. B, issue an opinion on of the current state and end the audit. C, conduct compliance testing on available data. D, identify and evaluate existing practices. Of course, the answer is D. I've already explained this earlier. The fact that they do not have procedures documented, all right, means that you need to check for practices. So you audit them based on the identified practices, and of course, we're going to recommend OFI, opportunity for improvement, that they start documenting their procedures henceforth. So the best answer is D. Okay, let's look at the next one. Understanding the areas of IS risk in an auditor is primarily to A, meet regulatory requirements, B, avoid being sued for negligence, C, reduce audit risk, D, document business processes. Of course, the answer is C. I've talked about that. Use the Pareto rule, 80-20 rule. Where are things likely to go wrong here in this organization? If they go wrong, where is the areas of highest impact? Focus your audit on that area of highest risk so that audit risk can be reduced. So the answer here is C. Okay, an IS auditor should primarily have A or an audit orientation, A, B, business orientation, C, risk orientation, D, technology orientation. I like this question, and there have always been debates when I raise this question, right? A lot of candidates go for C, risk orientation, some will go for A, some actually go for B, and B is the answer, business orientation. Right, an auditor shouldn't be so audit-minded, be so risk-minded that you forget about the business. Now, that's a tough one, and it's subject to debate, but actually that is the truth, right? The audit process is part of the business processes, all right? The organization you are working for, either in the private sector or the public sector, the company has a business objective. That organization has a business objective. So your job as an auditor is actually to ensure that your organization achieves its objectives. So what you are doing as an auditor, what you are doing as a risk manager, what you are doing as a compliance professional is actually adding up to what the sales guys are doing, what the production guys are doing, what the IT guys are doing, so that at the end of the day, we achieve our goal, which is basically to ensure that the business objectives of that organization, are achieved. So it's very important for the modern day auditor to actually have a business orientation. This is more important than having audit or risk orientation, even though they are also very important. But the best orientation is for the auditor to be a businessman, to be a businesswoman. Thank you, ladies and gentlemen. It has been a wonderful time with you again in CISA Domain 1 Part 2. If you have not subscribed to this channel, kindly subscribe so that you can be able to get notifications, okay, when I drop other videos. So very, very soon, I'm going to drop the part 3 of this series, CISA Domain 1. Once again, my name is Akinwale Akindia. All right, so see you again in my next video. Thank you.